The following is a presentation of TFNN. It is now time for the Tiger Technician Hour with your host, Basil Chapman.
Hi, everyone. Welcome. Welcome to the Monday edition, September the 10th, of the Tiger Technician's Hour. And, of course, today, same number as always, 877-927-6648. Love to hear your calls. And as always, it's a pretty important day. Why is it important? Well, on a very short-term basis, I'm a little bit cautious here, and there are a couple of reasons for it, and I'll go through those reasons right now. The Dow's up 4 at 13,310. The technical picture is a critical period just for the MACD, the moving average convergence divergence. Why? Because on Friday it stopped right at the yellow line. This is when you're looking at the charts, you'll see that this top indicator right here, the yellow and red lines, are the MACD. And that MACD stopped right at about to cross positive, where the yellow line, the fast-moving average of the MACD, crosses the red line, the slow-moving average. Today, so far, it has closed above, and that is important. Why? Because the stochastic has been lagging. It's at 47%, has a trajectory to the upside, but until we see that red line, the slow-moving average, really push into the, not the 67s, but the 80% area, on a shorter-term situation, you've got to expect that the action on last week, especially the last couple of days, had a certain power to it. I know that for my subscribers in my opening call, there were 5 or 6 positions that we missed. I just didn't step up to the plate. Everything was there, the ChapmanWave methodology, the works, everything came in. It just, if you didn't get it at a precise moment, then every day these prices, Ford, TGB, just a number of low-price stocks, pushed higher without a pullback or barely a pullback each day. So on a short-term basis, I'm anticipating there's a little bit of a breather here, but I have levels, the parameters are really clear of where we would, if we were to close above, it's a breakout and where we start to pull back. So let's run through these things. On the Dow, making an attempt to reach the 13,330 level, which 13,338 was the May high, May the 1st. So far, it's held beautifully the up channel support. And all I'm really expecting, if there's a pullback, it'll just be a very sudden disappointment on something or something said. Maybe the Dow slips back to 13,220 to 13,192, the 9-period exponential moving average, if it's going to happen at all. If it's going to happen at all, it's going to happen quite quickly. So, wait a minute. Whoops, there's something different here. There it is. So let me do this. The low of 13,290, that was 77. Right, so that's a C, a trough C. I have it in all the other charts, never updated it here. So this is the daily chart of the Dow. What's very important is that we also discuss, so this is a brand new A, I call that a gray. I'm going to discuss these things because, as I say, I'm going to work harder to be able to explain the ChapmanWave methodology. I do intend to have a live Master Trader series coming up. Talking about a live Master Trader series coming up in October. If you're interested in any of our services, go to the front page, and we've got just so many. Just about every one of us has a service, a daily service or a weekly service, and because of it, we have a Tiger Dollar Week going on right this moment. So, if you spend $500 on a Tiger, that is a Tiger promotional Tiger Dollar card or Tiger Dollar bonus, you will get $600. That's 20%. If you go to $800, you get $1,000. If you spend $1,150, you get $1,500. That's 30%. Plus, you're going to get a free access to a free 5-hour live online webinar with Tom O'Brien, and Tom will show you exactly how he trades. It's always fascinating to watch. He has, he uses his own proprietary techniques, and he discusses them. And when he trades live, it's quite exciting. And we've seen him do that when we used to have those big meetings down in Florida. He would always do one, and it was always interesting to see how he would score on an option or whatever it was. So this is all a bonus. So think about it. You've got this week. You've got until I think it's September the 16th, because after that, the bonuses are going to get less for a benefit, 10%, 15, 20% instead of 20, 25, and 30. So please think about that. Now, so I'm looking at this and I'm saying, okay, so far, technically, the up channel in the Dow has held beautifully, held support, about to try to retest the 13,330s. If it breaks decisively by Tuesday or Wednesday, decisively, I mean if it goes into the difficult 13,370s to 90s, closes above there, goes into 13,400 and closes there over the next few days this week, hopefully, that means one thing. If in fact we fail, if this barrier area is truly a strong barrier, and we will actually know within another couple of hours, because when you get to these levels, you either want to slice right through them, the pattern I call the ChapmanWave cup and ladle, or you get the potential for a cup and handle or a double top. So we're going to watch this closely. Parameters on the downside, 13,190, undercut that. You'll be testing the up channel, major support. I call it major support on a short term. Remember, daily, I'm talking daily talk here. This is not weekly. We'll talk about the weekly in a moment. And that says be careful, because you can test the 12,970s. You break that, and there could be a downtrend going towards the 12,700, 12,600 area. With GE acting the way it is, Ford, etc., I just see a sudden pullback, kind of a disappointment news type thing. Doesn't have to happen. It's just kind of what I'm seeing in my opening call. We're still long and short. I'm looking at diverse stocks. You'll see the same thing here in the weekly of the Dow. Now, what's interesting is the monthly chart is still heading towards that high. I'm going to bring this up for just a moment here, because I do it. I want to do it more often. I want to show you how important it is to try to look at what I call naked charts that have as few as possible indicators on it. This has no indicators. It does have a channel, and it's the S&P monthly, the very long-term chart. I can go back even further. You'll see. Go back to prior 1988. Actually, I do go back to 1920, but that's not the, no, 1920 on the Dow. The S&P, I think, was 1938 or a little bit later. So this is a stock chart that shows you a monthly long-term view, and it says very clearly that until the pattern changes of making higher highs and higher lows, we're in a buy mode in the monthly. Make it as simple as possible. When will that crack? It'll crack if you take out, if it's this month, you'd have to take out 1332. If it's next month, it's a rising trend line, maybe 1338. So that's what I'm looking at. Meantime, I have to consider this is very nice action on a monthly chart. So now let's go back to the S&P in greater detail. In the S&P, there we go, S&P, SPX.X. And I'll do this quickly because we've got callers on the line. I want to get to them as soon as possible. The weekly chart did break out. Now, remember the pattern that I talk about in the ChapmanWave, C1, C2, whether you make you just miss making a leg D up, but all the technicals are failing. Everything there says the sign is pointing south. Don't get carried away. Just treat it as some kind of a top. It'll be confirmed later. Well, look what happened. That C1 at 1422 in the S&P went to, on the 4th of May, it went to 1415. 7 points lower, but all the technicals are failing. It pulled back sharply to the 1266 level week of the 8th of June, and now it's gone up. And it's gone up in two ways. It's gone up either as a new AB going to a CD, or the old, and I like to be conservative, so I'm going to the old one. I'm calling it old leg D and now leg E. So two ways I've got it, that this says be a little bit careful. But then you say, wait a minute, the S&P is holding the 9-period exponential moving average in the weekly chart. That's this middle chart. If you're looking at Tiger TV, let me stretch it so that this is the middle chart right here. And you can see it's holding beautifully. The MACD's moving higher, not accelerating as it was with that fantastic move going to the May high, but it is moving positively. And the stochastic's at 93%. And that 93% says all systems so far are positive, and the monthly chart has just broken out to a new leg. I forgot to put this in. F/B. If this is leg B, it's going to be a very exciting year. If this is leg F, we will know by the end of the month, certainly going into October, if they're 13,000, here in this case it's 13,070s and 9 EMA. If it closes under 13,065, be very careful. Okay, so the S&P, let me give you the near-term parameters. I'm going to call this I'm calling this, just to be conservative, I'm calling this leg D. And what's exciting about this is that it went very much above that previous high in the S&P of 1426 on the 2nd of August. So the support now is at 1433 to 1428. Remember, just a moment ago I was talking about 13s. That's for the monthly chart. So to always have a perspective of where you are in the time frames. And that's what we will discuss in any Master Trader series I have. We spend a lot of time with that. So I'm going to just run the numbers quickly. The numbers disappeared. The numbers are, and here we go. The Dow is up 14, S&P's unch, the comp index is down 11 at 31.25. I'm going to talk about round numbers and other things in a moment. You've got, let me go down to gold. Gold is, the GLD is down 48 cents at 167. The SLV, silver is a little mixed up here. The silver is down. I think it was down when I last saw it. No, silver's up 13 cents. High-grade copper is about unch at 96.30, and you've got the TLT, which the bonds are at 123.75, down 28 cents. So we're going to go to our first caller. We've got on the line Ilka in Boston. Hi, Ilka. How are you?
Very good, Basil. How are you?
I'm very well, thank you.
How was your weekend?
Very good, thank you.
Did you play any tennis?
Not in the U.S. Open, no. Actually, I have to hold off for a little while. I had a problem with my shoulder, and I was hoping to do Larry's show next, but I can't do it. I got called to, they have an opening for some physical therapy. So I'm hoping in a few weeks I'll be right back again. Not a big, well, it's an inconvenience, and that's just the way it is. So you'd like to look at
the BRLI. I'm actually, I've traded this a lot, but I'm looking into getting in. So I wanted to just kind of see how you see that.
Okay, so this is BRLI, Buyer Reference Labs. I'm going to be back with this. We'll be on with Ilka from Boston. This is BRLI is a symbol, folks. You can get it up on your chart. It's a trading at 27.32. We'll be right back after these important messages.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, Kate Stalter, David White, Larry Pesavento, Victor Jones, or Carol Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
Millionaires are made every day. The fact is, living your dreams is possible. Someone, somewhere is going to get rich. My recommendation is, let that be you. Each day, someone is making the decision to better themselves and creating a plan to fulfill their financial dreams. Let that be you. The key to turning dreams into reality is to take massive action. Let that be you. I'm Steve Rhodes, co-host of the Money Master Show with Tom O'Brien, seen daily at TFNN, and I can help you with your journey to great wealth. I'll show you how to create the ultimate financial edge, a set of tools, insights, and strategies that are part of my daily newsletter service, Mastering Probability. You'll have direct access to me by phone, email, and my private library of trading and investing secrets for 30 days with an unconditional money-back guarantee. I'll take your trading to the next level. Click on my name, Steve Rhodes, on the homepage of TFNN.com and turn your dreams into reality. Mastering Probability, folks. Let that be you.
Kate Stalter's exciting newsletter, Low Priced Leaders, has just launched, and now is a great time to get a 2-week free trial. Every Wednesday afternoon, Kate sends out her weekly newsletter to her subscribers where she focuses on small cap stocks with market caps under $2 billion, as well as low-priced equities with share prices ranging from $5 to $12. Kate tracks a variety of stocks with a combination of strong technical support and solid fundamentals. Many of the stocks featured will be recent IPOs. These newer issues are often some of the biggest price gainers in the market and provide an excellent opportunity for substantial gains if timed correctly. You can catch Kate Stalter live on Tiger TV with her small cap roundup every Tuesday and Thursday at 11 a.m. Eastern Time, and visit TFNN.com right now to get your 2-week free trial to her brand new newsletter, Low Priced Leaders, while locking in the low introductory monthly rate of only $37.50 per month, almost a 50% discount. Act now.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. This segment is brought to you by BackTech Environmental. For more information, just click the BackTech banner on the front page of TFNN.com.
Hi, folks. Basil Chapman, Tiger Technicians Hour. This is what we're looking at. We're on with Ilka from Boston. We're looking at BRLI. This is BioReference Labs. And Ilka's looking to get in. You have no position right now, correct?
Correct. The only thing on the daily, I think it was an E. There, after C, there is a slider.
Yeah, you're right. Very good. Folks, Ilka knows all about the ChapmanWave, and she corrected me. I just did it during the break. And, in fact, I missed a little peak. That's your only obligation in the ChapmanWave, is to never miss a peak or a trough letter, because it's very important you get the last right in. And remember, you don't go to jail. There's no consequences other than if you don't have the last letter correct, or at least knowing that there could be an alternate wave count. That's your obligation, because it's going to help you moving ahead. In this particular case, you went to, now in the ChapmanWave, a very simple technique in concept and in application very often. And the low bar, you look for the most obvious low bar. The low bar is on the 1st of June at 1829. You merely count each successively higher peak. When you get to peak D, that's where a number of things can happen. In this case, because the MACD, you notice this, right, Ilka, you notice that the fast-moving average was still very much above the slow-moving average in the MACD. So you went to E and an F. Beautiful doji top at 28.28 on the 11th of July. Pulls back very quickly to the 24.58 level on the 25th, starts a brand new buy mode, and it goes higher. And this is, you see, what I love, the fact that you brought this chart up is really applicable, because chart patterns repeat over and over again, and it doesn't matter what sectors or what time frames, they just repeat it because it's a human nature event, and it's a price point of human emotion. Now what we're looking at is, if you'll notice that this last peak E occurred where the MACD was rising much lower than it was before, very much like the weekly charts we're looking at now in many of the indexes, which I'm going to get to next. But most importantly, you'll see that stochastic plunge, and it came all the way back down to about 28%, let me see, about 25%. That was on the 4th of August. And then what happened? What happened was it rallied and it curved over in the stochastic, and the MACD did not cross positive. I'm a little concerned that if I do the daily chart, two things are happening. One is I can't help but immediately put that arch formation, like that H, the dreaded H formation. I can't help but do this very quickly, go like that, for a declining trend line. I could, in fact, put a cup formation in there, but it's using up a little bit too. Right? I'm sorry, what?
It went in too deep a little.
It went a little too deep. That wasn't the concern, because there was a doji candle with a very nice close the day after and the next day. So far, the evidence is not to say that it's negative on price, but the technicals are saying unless it can break the downtrend line, and that would take it to push above 28.55, that's $1.50 from here. The way this acts, because it moves very quickly once it makes up a trend decision, it needs to do that very quickly, and so far it's very weak today. When I go to the 120-minute chart, I've got a buy signal, kind of a buy mode, but that buy mode failed to a certain extent because the stochastic only went up for about 3 bars and then pulled back. And it looks like it really wants to test the 27 to 26.50 area, 26.64.
Oh, I agree. No, exactly. I'm trying to get in around 26.30. And the divergence you're talking about is actually something I'm liking, the negative divergence, because remember with Bob as the Elliott wave and all, with this is forming, I think this had formed the low 5-6 days ago wave. I'm still looking for wave 5 to top wave 5 to happen, and I think this is the divergence. The divergence is going to, I need that in wave 5. But the only thing is, I'm trying to get like $1 lower with that low would be my stop.
Okay, so here's the other thing that I need to mention. In BRLI, on the weekly chart, and this is the issue that I was making. Do you know I talk about that technique, that technique that I call the double camel hump, or you can call it an M-shaped pattern. I've got to be very careful with a chart like this. It held the 200 moving average beautifully back on the week of the 1st of June and the week of the 8th. Then it took off. But you can see that there are now lower parameters for the stochastic, and the MACD is very close to turning down. And that brings me...
only. I mean, it's flattening. It's not really turning down, but it's at this point, yes,
it's
right?
flattening out, right, flattening out. Okay. So let me just finish this thought as soon as we get back, and then I'm going to give you exact numbers that I'd be looking for, and that might help you. So hold on. We'll be right back with Ilka. Dow's up 7. S&P's down 63 cents. I'll be right back. Basil Chapman. Hey, don't forget those Tiger dollars. Check out the front page of TFNN.
If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now. You've heard Tom O'Brien on the air, and you've seen him on Tiger TV, as well as being featured as a regular CNBC guest and contributor, and now you can have access to his expert trading advice each morning through his daily trading newsletter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, gives traders, investors, and money managers a thorough strategy for trading stocks, options, and indices every market day. Market Insights comes out each market day before 9:30 a.m. and provides traders with Tom's daily commentary, opinion, and specific trade recommendations on the markets. Using advanced Fibonacci methods, volume indicators, Gartley patterns, candlestick charting, gaps, and market timing, Market Insights will give you specific trade recommendations including entry, stop, and exit prices. The summer is over and traders are back. Get your 2-week free trial to Market Insights today by visiting the front page of TFNN.com. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Smith Barney. Simply picking the right stocks is not enough. Research has shown that choosing the right proportion of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley Smith Barney believes that a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what asset allocation and a Morgan Stanley Smith Barney financial advisor can do for you. Call Angela O'Brien, First Vice President and Certified Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Smith Barney, LLC. Member SIPC.
This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
Hi, folks. We're back. We're looking at BRLI. This is Bioreference Labs. Funny, I did all that work and everything, and if you asked me just a second ago what was I looking at, I would only remember the chart patterns. I wouldn't even remember the name of the stock or the price. In fact, this is the first time I'm looking at the price in great detail right now. 27.30 is what it's at, down 9 cents. Now, if you look, if you look at the monthly chart, I don't know if you can see here in Tiger TV, there's a beautiful up channel. It's that little border that I call the sell zone or repellent zone. Well, it went up to it, but it hasn't held it twice now. Last month and the month before. But it's had a very nice opening week or so of trading in the monthly. So all I can say is I don't want to predict what it'll do for the month. But I will say that the stochastic's at 80%. That's good. MACD's expanding. That's good. But the wick of the candle that was made last month, if at any point it is trading and holding for a day or so at about 28.13, that's 83 cents higher, that'll say, uh-oh, be careful. This is going to try to get to the top of the wick, which is at 30.15, and that'll be a big positive. Now, that'll be, I say, only because, hey, this is the first time that it's had 2 months, consecutive months, of getting into that sell zone, and it's actually starting to act very positively. It hasn't done that before. On the other hand, if it takes out the low of the recent low of 26.08, And so far, there's a round number high of 28 this month. If it takes out 26, I'd say be very careful. So now this is the way I would trade this. Because the weekly chart has a potential for a little head and shoulders pattern, that's the reason why I'm saying it has to go right in. It has to show that it's got the capacity to get back into this upper range. So I'm looking at 20.70 is about the 26.77 is about the 200-period moving average, the 9-period moving average on the weekly. If it's able to hold that all the way through Thursday afternoon, even if it hasn't gone up very far, I'd say that's a good sign. And then I would say to you, put a buy stop on the upside of last week's candle of 28. If it closes over 28, or even if it trades at 28.01, you could just nibble on that, appreciating that there's still a chance for a head and shoulders pattern. But it's going to make the daily chart much better if it does that, because for the first time it'll be pushing above the mini downtrend line, the resistance. So those are the parameters, but I think you got the right idea. Just wait, let it give you the evidence, because you want to see how it can hold in the 26s if it gets there. It might have to do a retest of the low of 25.30, or it might hold well, because if the MACD and stochastic give that positive divergence as the price pulls back and they are moving higher, you're going to be able to say to yourself, aha, nice action. And the most important thing about this, you're looking at this as a position play, right? Not a trade.
Well, actually, it would, well, depending what you call position. I mean, I would probably, I have parameters where I would get out. And if the 25.30 is broken, actually, that's
you would not get in. Right. In fact, if that is broken, I'd even think of the short side.
Exactly. So
right.
No, I wouldn't be able. But I like on the monthly. I like the candle that you're saying, the wick, because I'm thinking of filling that.
Right.
You know, your Roman candle.
Right. So it might be using
and RSI, you know, all the RSI and all the
on the monthly is good.
Yeah, monthly is good, and to me, monthly is my highway. You know, so
that's the major trend.
Yeah, exactly.
Well, that's what I said. The major trend on the monthly, there's no change if you're looking only at price. If you're looking at the stochastic, it isn't quite as high as it was, but it's not yet negative. So you've got these parameters are very clear. And let me tell you, if at any time between now and October, if this closes in the 31.50s, that I have to consider that this is a new buy mode, and it's not a leg F, which is an alternate count rather than B. Very good.
34. Very good. Thank you very much.
Listen, thank you very much.
Thank you later. Bye-bye now.
Thank you very much for calling, Ilka. Now, let's do this, folks. Over the weekend, I don't know how many, on a Monday, I'm always afraid to put on any position, new position, because I've looked at so many charts. You can get an overload. I like to step back a day, and I'm pleased I'm stepping back a day to a certain extent, even though we've got a momentary cautionary stance. Let's just go through Investors Business Daily top stocks. Look, SWI, fantastic stock. Solar Winds. Solar Winds, of course, sounds like a solar company. No. I don't know why they call themselves Solar Winds. They are software program identification network, and it's really a fantastic company. The monthly, look at the monthly, it is just beautiful. Brand new buy mode starts at the lowest identifiable low at $12.10 in July of 2010, and only 1 month ever has it gone unclosed under the 9-period moving average September a year ago. Otherwise, it's always above there. I think it's getting a little extended, but I haven't got any signals in the monthly yet other than to say, hey, this really looks extended, but extended stocks like an Apple over the many years can continue for a very long time. But now look at the weekly. Remember the technique I was talking about with Ilka just a moment ago? Well, look at that up channel resistance. It stopped right at the up channel resistance. Okay, now here's the interesting thing. The daily chart, I have an alternate wave count. Now, the alternate wave count says that this is either a brand new leg A or an F. What would the stochastic's good, the MACD is doing okay. What would I be looking at? Well, I'd be looking for round numbers, all sorts of things. So far, I don't even get there, just a high-level consolidation. If it breaks out, it's at 59.05. If in the next 3 days it closes above 60.75, 60.25 was the last high, so 550 cents higher, I have to consider it's a leg B, and this is going even higher. If, on the other hand, it's making this potential for a head and shoulders sideways move, I'm not talking about a top, I'm talking about a left side consolidation, breaks to a new high, doesn't hold it, pulls back, and then tries to rally back again, that will only occur if it closes under 57. If it does that, then I say, be careful, it's making a high-level consolidation, no sell signal just yet, because everything's in place. So far, that's good. Let's look at Michael Kors. I happened to go into one yesterday while we were in the Chestnut Hill Mall. I saw it, and I said, I just got to see what's going on with this stock. Well, the monthly had, it's trading at 53.84. Ah, another stock in the 50s. Down 2.19. There's that pattern I was just talking about with solar winds. There's the left side shoulder. I was just talking about it with Ilka. Patterns repeat time after time. Now look at this. The left side makes its peak E at 54.92. Today it goes to 56.70. Friday went to, and today, what does it do? It gaps down, and it's making that pattern. There's the price. So I'm saying, okay, let's see. The weekly chart, well, it had a peak C1, C2, C3. That's those triple tops or double tops that just don't make that leg D. Had a round number there as well. 47 was the number. Broke under 47, went deep down. Now we've got a new leg up. Is this the culmination, leg D, that we were waiting for? Or is this a brand new leg B? I don't know. All I can say is that the technicals are very good. Everything is in place, and that is a positive, and it's only leg B up in the monthly. And it says normally, even though there's an IPO, stocks eventually get to leg D in their monthly charts. So far, high-level consolidation, just like SWI. Got to watch it closely. It's another reason why I was getting a bit cautious. Let's go to number 3, Mellanox. Doesn't it sound like something you take when you're not feeling very good? No, it's an Israeli designer of adapter, gateway, and switch ICSs for servers, telecom, infrastructure, and storage systems. Goes to 120. In the daily, a peak D, the second one in a very quick succession, and then plunges from 120 to today's low of 94.81. Nice peak D. We see the negative divergence between the MACD and stochastic. You know how Tom talks about volume, and eventually it catches up? This is the same thing here. When the stochastic and MACD are declining, you don't want to fight the trend. It says, be careful. There could be a pretty sharp decline, which there is. Look at the daily now, the weekly. The weekly has gone to a G/B. I'm calling it a G for now because I don't have any other way to count it. And you had what I call a silent doji last week, so 3 weeks ago. That says, be careful, because why? It's under the 9-period exponential moving average, but the week has barely begun. So if on Friday, Mellanox Technologies closes under the 102.85, 101 level. That's the 9-period exponential moving average, that white line. Hey, that says be careful, because Mellanox could need to take some Mellanox, because it's going to be in a down mode, a sell mode in the daily, and a sell signal in the daily, although the MACD is still good and the stochastic still at 89%. That's why it's only a sell signal in the weekly. But the monthly chart is a peak F if there's no new high in October. That says 76 would be the target if the stochastic and the MACD in the weekly start to break down. That'll start to weaken the monthly chart. So here again, another stock. A little bit of caution. And the only way this breaks out is if it makes a new high above 120.05. I just don't see that right now. But now I looked at Amazon today, and look what we see in Amazon. It opened today at a new all-time high at 259.00, a round number high. It goes to 260, round number high. Parameters are 100% clear on Amazon. If Amazon closes tomorrow or the next day just a little above it, but by Friday is down at the 255 level or lower, Amazon has made a short-term top because the weekly chart, I'm still right now calling leg C. All the technicals are good. MACD, good. And monthly chart is breaking out, but I'll start on the daily, and that's what I'll be looking at. And I'd say be real careful because Amazon could quickly go to the 9-period moving average and daily at 251. But wait a minute. What about something like a Caterpillar? Well, I'm looking at Caterpillar, and Caterpillar has a nice bounce to it, but it's only a bounce. And so far, what I have to look at is say Caterpillar was a great stock before. I want to look at Caterpillar because it's kind of telling us about a number of different aspects of the market, because I'm going to compare it to something like Illinois Toolworks in a moment. Look, it's made a double top in the monthly. That's the Groucho Marx eyebrows. Those are techniques that we'll be talking about in Masterclass Trader Series. So this is very important. If Caterpillar does find strength in September, it does need to close. It's at 88.19 now, up 9 cents. The monthly chart has to see something like 92 to 95 to really say, I'm not going down, I'm just going sideways, a high-level consolidation, because if it closes under the wick of the candle of July until 78 at any point during this month going into October, it's going to say, be careful, and it's also a kind of a be market careful. So that's it. But now let's look at Illinois Toolworks. Remember, I'm talking about this as a bifurcated market, a market where if you have strong stocks, and I heard Ken Shreve the other day talking about his strong stocks, and they are very strong stocks, a number of them are in IBD, but just they're looking fabulous. And then there are the weak stocks, the stocks that are saying the tide has turned. So here's Illinois Toolworks having made, and for now I have no choice, I'm calling it leg C in the monthly chart, having made at 61.10, the high of 2007 was round number 60. Oh, look at that, round number 60. I lost it because I had it in my charts, but this chart I had to redo. 60, and it's gone higher. It doesn't close higher, but it's making. Now, let's decipher. We talk chart patterns here at TFNN. What about this? Yeah, it's more V-shaped, but I'm still going to treat it as a cup formation. What about that? Isn't that like a cup and a handle formation? One of my least favorites. Hey, when I say least favorite, it doesn't mean to say it can't work. It's just one of my least favorites because by the time it actually does all the confirming and everything, you're almost out of a buy zone. You know, it doesn't happen often. I know Ken has a fabulous way of looking at it. He talks about it as levels of gradations, that is. So it's the first one, the second one, the third one of these cup formations. I look at it a little differently. I say, hey, it's gone sideways. It's potentially about to break to the upside. Let's watch it real closely because Illinois Toolworks will be very important. After all, tools, economy, things might be coming back. Look at MAS, NASDAQ. NASDAQ's acting beautifully, gone to a leg F, I'm calling it right now, in this very high-level consolidation that I call the ChapmanWave stalk leg. It could be about to break out to retest the highs of 1468, and it's at 1433 right now. That's construction supplies and construction. So that's what I'm saying. It's kind of a mixed market. And someone had asked me to put on RF, which is Ralph Lauren, I believe. Ralph Lauren, am I right? Oh, no, Regions Financial Corporation. All right, well, RL is Ralph Lauren. Let me just do that. Yeah, maybe it's top, but it's coming back quite nicely. Hey, I'll be back. Basil Chapman, 877-927-6648.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil's subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to check out Basil Chapman's newsletter, The Opening Call, then visit the front page of TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, the Tiger Technicians Hour, Monday, Wednesday, and Friday, 11 a.m. Eastern on TFNN.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the Rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to TFNN.com today. Don't miss out on this great offer. Act now. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Time is the great equalizer of all mankind. Time doesn't care about winners or losers, who succeeds or fails. Time only cares that you played the game. Question, are you playing the money game? Is your money working as hard for you as you are for it? I'm Steve Rhodes, author of Mastering Probability, a daily trading and investment newsletter service, and we're celebrating our 1-year anniversary. In year 1, we generated a 30% profit. Plus, I provided 26 hours of live coaching to my clients. My daily newsletter service is available by 8 a.m. each day and covers the stock, futures, currency, and commodity markets, along with all the current patterns that you can trade. Each newsletter is packed with education, and it's yours for as little as $3 per day. And for the next 30 days, you can try it risk-free. Click on my name, Steve Rhodes, on the homepage of TFNN.com and begin your journey to great wealth today. If you're waiting for a better tomorrow, remember this. Today's tomorrow will soon be yesterday, and your clock is ticking. Mastering Probability. Now is your time.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Hi, folks. Yeah, I was asked during the break if I would look at RF, which is Regions Financial Corp, trading at $7.54, up 17 cents. Yeah, this is where the thinking can get in the way of, or the overthinking can get in the way of a very nice trade. After all, it's just consistently making higher highs and higher lows. The weekly chart is holding the 9-period moving average of $7.11. Got a little extended in leg D right here, just in terms of if you use, say, a Bollinger Band or something, you'd find you're getting to towards the upper end. Now what I'm thinking is that if it pulls back, 7.11, the close above 7.11 is really all you're asking for. So your risk is 40 cents, and if you are long, I would say that unless it closes decisively for 2 full weeks underneath $6.90, not the 7.11 of the 9-period moving average, but the low of last week. This is just steadily moving higher. The MACD is great in the weekly charts. Stochastic's holding beautifully at 93%. Very often 93 goes to 95, and then it starts to pull back. Now, the monthly, that's something different altogether. This is a stock that once traded at $45.63. That same month had a low of round number low of 41. And then it pulled back to the 200-period moving average. Look at that, beautiful. The way you use these tools is very important, folks. Look, 200-period moving average, great support for months. back in 2000 in March through the breakout, start of the breakout in November. So, use these tools. Look what happens. Breaks under it. It hasn't been to the 200 period moving average since it broke down October of 2007. So most importantly, when you do your homework, sometimes it's hard looking at the daily chart to get the big picture. And as Ilka was talking about earlier on, she's using the monthly in her chart that she was looking at for the bigger picture. In this case, the big picture says the monthly ever since it broke out and closed above the 9-period moving average in January of this year at 546, it hasn't once closed underneath that 9-period moving average. And in the weekly, it's been covered now. I think it's $5, and it's approximately $6.70, $6.50, somewhere around there. So yeah, that's the way to do it. So I like it. I think if you're holding it as a position play rather than a trade, that's what you've got to keep in mind. It's proving itself. You don't have to overprove anything just yet. Now, what do you do to get in? Well, that's the level you look at. You're going to have to just wait to test that line, and that line's going to tell you, is it going to hold, isn't going to hold the 9-period moving average. Now, the XLF is really important that we look at right now. You remember I've been speaking about sector analysis, and that this is a diffuse market, that there are stocks that are decisively going up and others that are going down. The home builders has just been on a tear, the construction area. Look at the XLF, holding the 9-period moving average in the weekly chart, just acting very well. Leg C up, made a new high today. No, it didn't. So if XLF does not hit 1572, that would imply very clearly that there's a peak C, and there should be a peak D. And the reason why I'm looking at the XLF so closely, I missed an opportunity the other day, just had a great opportunity to get in. I didn't take it, unfortunately. And that says that when the 1524 is the low. If there's a very sharp, sudden pullback at any point, if the XLF goes towards the $15, and this is the S&P Financial Spider Fund, it's at 1566. Oh, man, if we can go towards the 1544 level, I think it's worth a small position on the long side, even though this is leg D in the daily, because it's leg C in the weekly. But the ChapmanWave technique that I discussed in my introducing the ChapmanWave methodology, called the overlapping wave, that starts chapter 16, slide 317, that says that any pullback here should be bought, because there's a very good chance you can get an overlapping wave that will take it over the 16.24 200-period exponential moving average, with the MACD and stochastic very strong. So you can see we could very easily have a rotation here where the former big winners start to pull back. Hey, that's the end of the show. I'll see you on Wednesday. Thanks for being here. Stay tuned. We've got great program. Don't forget your Tiger Dollars coming.